Hey there, everybody. Welcome back to another 21st Century Renaissance and another open interest newsletter breakdown on GameStop. I'm your host, Dr. Michael LoPiano, and we are into the middle of the week now, looking at this short week and what's going on with our ETF activity in the background. These are some of the questions we're going to be thinking about today, as well as what our options data, as always, can potentially be telling us about what we can expect from our price action in the near future. So that's coming up today. Before we get started, we are going to turn to our gratitude. Today's gratitude goes out to Thomas Tao Hey once again for sponsoring today's newsletter and its video breakdown, as well as to our monthly supporters, Not Medical Advice, Master Kurt Lusko, Cosmotropic, DeSwag52, and Hey Luckies, aka Faithless Looter, for helping offset some of my data expenses on a recurring basis. Many thanks to everyone who has left comments and or questions in the past. Everybody who contributes something helps with, no matter what it is, helps contribute to our research and publications here at 21st Century Renaissance. So thank you very much. So we'll start out with our contextual overview. Things generally continuing to look stable. By and large, right, just to get to, I guess, sum this up ahead of time, right, is not looking too much like we're seeing very much in the way of change in many of our forward-facing or outward-facing, more our sort of immediately palpable indicators here, right? So basically SPY still looking very, very stable going into the next couple days, basically into the end of this short week. High concentration of call gamma, low volatility, charging up likely over the next couple days, maybe inching up over the next couple days toward maybe a test of that $620 call wall position there at large. Bitcoin stabilizing, waiting for some kind of move to go on there, right? Of course, we are still waiting on next week's news on, let's see, that'll be the 8th. So the 8th is Tuesday. Yeah, Tuesday's news regarding the tariff situation, any developments there, possible uncertainty regarding what the Trump administration might have to say about that. We do see right next week, we do have a bit of put gamma building up underneath us. That likely has something to do with that particular situation, positioning of some puts to potentially deal with the return of a bit of volatility. That may stimulate either via Bitcoin or via something that has to do with the ETF environment, may end up stimulating a bit of a return of volatility to GameStop. That will also more or less, I think, just about next week should correspond with so this kind of T plus 33 trading days. So that is T plus 6 trading days followed by 35 calendar days followed by T plus 1, which is the Bernoulli formula for ETF FTDs and their settlement deadlines. So just right about now, so today corresponds more or less with the 13th of May in that regard. So if we bump over to our daily chart here on GameStop, right? So that's more or less in this area. So today, 13th or 14th of May. So right in this area, right, we had kind of moved up. We had this dip down. Then we had a nice bullish period. And then, right, we started to flatten out a little bit. So we had quite a lot of those deep in the money short put trades come in right in this area. Then we started to move to the upside decently, and then we stopped. And for a period of about 4 to 5 days, right in this area, those trades returned, culminating, I want to say, around the 21st to the 22nd. And then on the 23rd, we started to move. 22nd, we actually started to day before. Right? So it would have been here, 21st. 22nd, 23rd, 24th, or 22nd and 23rd, we started to move pretty aggressively to the upside ahead of that, that kind of Bitcoin news and anticipation, which likely had something to do with the de-internalization of some volatility via this ETF charade system. So, so basically, right now, the 2nd is the 2nd of July. We're right in this patch. So we've got, let's say 1, 2, 3, 4, 5, 6, 7 trading days. 7 trading days from now Yeah, I was going to put us basically right into about the 11th. So possibly the week following that. So going into July OPEX, we will have any sort of creation windows that overlap with any FTDs incurred during that period, which were, let's see, let's go take a look. We did get some substantial FTDs then. We have had a lot of kind of stacking days of FTDs over in XRT. So let's see, right? We just got our new FTD drop here, right? We can see, yeah. So the 23rd we had a very large number of FTDs in XRT. The 28th, basically through the 2nd. So then, right, we have these big blocks of rolling FTDs, very interestingly. So between the 23rd and the 6th, we had millions of rolling FTDs kind of stacking up here. So it begs the question, right? What's going to happen with these, with this volume? To what extent can this be internalized? To what extent does any of this have to be de-internalized at this point? We have been in a really low volatility environment for several weeks now, of course, hitting 52-week lows, setting a new record for 52-week lows toward the end of last week. So is this potentially an unappealing time to de-internalize some of this volatility? That's certainly an interesting question. It does look like at the moment, a bit of creation kind of redemption, especially redemption, overlapping large redemption orders do seem to be affecting to a certain degree, certainly our lending environment. What seems to be the case, right? So basically heading into about the middle of the week last week, right, we saw quite a bit of XRT creation come in, which sent shares outstanding up from 2 million all the way back up to 6.45 million. By the end of the week, that had come down to just about 5.9 million, 5.95. But throughout the course of the day last Friday, that shot down from 5.95 to 3.4. Earlier this week, we had a creation, small bit of creation, about 600,000 shares take us up to 4 million. Very interestingly, the number of shares outstanding in XRT have come down once again. So from 4 million down to 2.05 million. Now, prior to, I want to say April, so early April, around April 4th. Well, that's not exactly right. Prior to April 30th. So we did have a very low number. I think April 4th was around 2.35 million. But seeing XRT shares outstanding in the 2 million area is something that very rarely occurs. So prior to getting down to 2.35 million on April 4th, there were only 2 other occurrences where GameStop had actually seen a lower number, where XRT had seen a lower number of shares outstanding. The one was back in 2022. I want to say it was around March or April 2022, maybe February 20. No, I think it was February 2022. And then the only other time was January 29th of 2021. So right after, like days after the sneeze. Since then, right? So since April 4th, this has happened 4 times. And in fact, gone to the lowest value all time, which was on May 1st, which was 1.75 billion shares outstanding. Right. So it's very interesting to see the number of shares go up, like triple, and then come immediately back down in the span of about 2 weeks. This is something we've never seen happen. What this more or less says to me is that there is a lot of, right, so we talked about this in the past, certainly the idea that going ahead with these convertible bond trades puts a lot of competition, let's say, out into lending liquidity for GameStop. And that puts something of a strain on its synthetic or extended liquidity through the ETF system. So, right, historically, we've basically hypothesized that institutions have used ETFs, they've abused ETFs like XRT in order to internalize short positions, in order to kick the can down the road with trades that, let's say that parts of certain trades that did not exactly hit, going back to some of this unanticipatedly high volatility that we saw come onto the tape basically as a result of the events of 2020 and 2021. And that this has been part of how they've been able to de-internalize different parts of this and close out parts of trades gone bad going into that particular event. What seems to be the case as well is that these were then also used to make outsized profits by setting a custom time for when volatility is allowed to come back onto the tape, wherein this can be sold certainly through the options market in significant proportion, right? If you know when volatility is going to come in, you can then trade accordingly. When you know when it's going to subside, you can then reposition accordingly. And of course, you can set much more precise and therefore much better returning options bets based on expiry corresponding to these moments of returning or subsiding volatility. So we are seeing a lot of strain, it does seem, occur here with XRT. This extended liquidity network is being challenged, it seems, by whatever is going on with this convertible bond trade and how demand for GameStop lending liquidity, which may be soaked up by these particular these bond trades, may in fact be putting a strain on whoever has historically been using this extended ETF network in order to play this volatility game, right? Influence this volatility game. So very interesting to continue to monitor and take a look at this situation. It does seem, right, we are seeing huge proportions of our volume take place throughout the day off exchange. So part of what is explaining these very low volatility periods, right, when you see exchange volume like this, off exchange volume at 4.6 million, 55% of the day's volume. So even though we're seeing like, oh, but why? It's 8.6 million per day, 10 million per day, 10 million, that's higher than our 52-week average, trading day average. What's going on there? Well, most of this, of course, is occurring off exchange, right? So really, yesterday's trading volume, even though it says 8.6, only 3.8 million shares are being traded onto the tape. That's what's hitting the lit market. That's what's really affecting the price. If it's occurring off exchange, it's not affecting the price intraday, right? So the volume is being logged, but it doesn't affect the price. So when we consider 3.8 million shares is really the volume that we're dealing with, yeah, that looks like our trading volume during very low volatility periods. So very interesting. So we're continuing to see this. It does seem like some XRT redemption may have provided the necessary lending liquidity to keep GameStop volatility suppressed. Yesterday, we did spend the majority of the day trading above that $24 position there, but of course we did see right at around 10:30, around 2 million shares, new shares came onto the tape. That's directly equivalent to the number of shares of XRT that were redeemed. Not necessarily saying that XRT was the only source of this particular liquidity, but we did see this type of price action does make sense in terms of how it coincides. And then some of this looks to have been then applied as a form of tactical short later in the day. So basically, when you see low volume days, I mean, if the total volume on the day is 3.8 million shares, taking 300 or 400,000 shares to adjust the price downward, has the type of effect, right? You can overcome a position like the $24 call gamma exposure position. You can overcome that with a few 100,000 shares. It doesn't necessarily require much more volume than that, especially when we're seeing much lower intraday lit exchange volumes. Okay, so we're seeing a bit of that, right? We might end up having to, wait maybe another couple weeks. Actually, it does look like if we do have this kind of return of volatility, if we have this kind of, Bernoulli formula reemergence of some of this particular volatility, say during that week or the lead up to July OPEX, we got something like that last year. If we do see some of this kind of de-internalized and then brought onto the tape, right, T plus 33 trading days later, where we have, right, this whole range here, of course, we have rolling high XRT FTDs. It would more or less line up with what I would expect to be the beginnings of a daily roaring kitty price momentum oscillator bullish crossover. So maybe we have to wait for something like that. Maybe the return of volatility in force. We'll have to wait until several of these factors end up lining up. The lead up to July UpX may be particularly interesting, although certainly always wary of just how far that might be able to extend, given what we've seen in the past. Some of these particularly high gamma exposure, especially call gamma exposure concentration points, very conspicuously during especially big options expiries, tend not to close in the money. So with that being said, in terms of our options data for today, we did not see very much activity going into this short expiry. So we're closing right. July 4th is a holiday and a bank holiday at that. So our expiry for this week is taking place on July 3rd. Yeah, we're not seeing too much in the way of options activity going into that. We saw a lot of, interestingly, put closures, and in the money calls taken off the board. Options activity, which did show OI expansion, was largely neutral, not really skewed towards the ask or the bid. So hard to get a beeline necessarily on that with respect to trader sentiment, whether these are skewed towards long call or long put or short call or short put positions. Difficult to say. We can say, however, that if we take a look at what's going on for next week, we are still looking at skews toward long call positions. We are looking at mostly bullish bets. We are still seeing skews by and large toward short puts at 23.50 and up. We did have one key strike, and that is $23 was net at the ask. But by and large, especially at strikes like $25, $26, we still are looking at an options market that is more or less bullish on this in the short to medium term, basically going into the 11th. Obviously, right, I said this yesterday, where we did see quite a lot of seemingly enthusiastic long call bets come onto the tape yesterday towards the end of the day, especially basically from the second half of the day onward. Those have not retreated. That's one thing to point out. But at the same time, right, I'm in particular stressing the risks of chasing these types of bets. I myself do not trade short-term single leg long options. I do not do this. And I'm particularly keen to remind everyone watching and listening, right, just because I take a look and I analyze what's going on in the options markets, whether I use indicators like what are short-term traders doing, that does not necessarily mean that I endorse copying those types of trades. I myself do not chase those types of trades in particular, but they can serve as a powerful indicator for potentially identifying short-term price movements. So just to put that out there. Yeah, Max Payne still sitting at 23.50. And if we take a look at our GEX environment, right, we are still seeing this very tight bracket here forming up around 24 and $25. If we do end up seeing something of a more dynamic open to the upside that does move back over 24, I wouldn't be surprised if then we continue to trade within that 24 to 25 bracket, with 24 continuing to serve as a downside support in that range, and 25, of course, as an upside resistance mark. I would still anticipate, based on what I've seen, a continuation potentially of low volatility and low volume conditions heading into the end of the week, with likely close situated somewhere between maybe $23.50 and $24. I'm not yet seeing the emergence of signals that tell me that we should anticipate that, oh man, imminently there's going to be a lot of volatility that's going to come back on the tape. Maybe it happens, but I'm not seeing any kind of forewarnings of that for the next day or so. Maybe, there's a chance for this potentially going into July UpX, maybe about 7 to 10 trading days from now, maybe on the road to that, but not really in the next day or so, despite how optimistic it seems that certain traders, maybe yesterday and into today, may or may not have been with respect to anticipating some of that volatility. So yeah, that's it for today's update. As a reminder, we are going to have our weekly live stream this week on Thursday at market close, right, rather than Friday. Friday is July 4th, U.S. National Independence Day. We will not do our live stream that day. We'll do it on Thursday following market close at 4 p.m. Eastern time. So thank you, of course, everyone, for watching and listening. Look forward to seeing you for tomorrow's market update, as well as our live stream on this upcoming holiday weekend. So thank you very much, everyone. We will see you next time. Take care.